Welcome back, investors. Today, we're diving deep into Rheinmetall AG, trading under the ticker symbol RHM, DUC. This company has been making waves in the defense and automotive industries, and its stock has been on an impressive run. But is it still a good investment, or are we looking at a potential pullback? Let's break down the key financials, technical indicators, and recent developments to see what's really going on. As of March 6, 2025, Rheinmetall AG's stock is trading at €1,199. Over the past year, the stock has surged by approximately 174.68%, hitting a 52-week high of €1,202.50 and a low of €402. That's a massive rally, and it raises the question, what's driving this growth? One major factor is the increased global defense spending, which has heavily benefited Rheinmetall. As a key supplier of military technology, the company has seen a surge in orders, boosting investor confidence. Additionally, strong earnings reports and a positive outlook from analysts have fueled this upward momentum. But does this mean the stock is overvalued, or is there still room to run? Let's dig deeper into some key financial ratios. Understanding a company's financial health is crucial before making an investment decision. Let's look at some key ratios that can give us insight into Rheinmetall's strength. Price to earnings, P/E ratio. Right now, the P/E ratio sits at 86.14, which is quite high. This means investors are paying €86.14 for every euro of earnings. A high P/E often signals strong growth expectations, but it can also indicate overvaluation. So, we need to consider other metrics. Earnings per share, EPS. The company's EPS is €13.92, meaning it has strong profitability on a per-share basis. However, growth in EPS over time will be key to justifying the high P/E. Return on equity, ROE. With an ROE of 21.98%, Rheinmetall is doing a great job of using shareholder equity to generate profits. Generally, anything above 15% is considered solid, so this is a strong sign. Debt to equity ratio. A manageable level of debt is always a good thing. A high debt to equity ratio can be risky, while a low one indicates financial stability. Rheinmetall seems to have a well-balanced structure, which is reassuring for investors. Current ratio. Liquidity is another important factor. A strong current ratio means the company has enough short-term assets to cover its short-term liabilities. This suggests that Rheinmetall is in a stable financial position. Now, let's talk about technicals. We're seeing strong support around €1,144.50, meaning that if the stock dips to this level, buyers may step in to push the price back up. On the flip side, there's resistance at €1,202.50, which is the recent high. If the stock breaks above this, we could see another leg higher. However, if it struggles to break through, we might see a pullback. Moving averages help us understand the overall trend. Right now, Rheinmetall's 20-day, 50-day, and 200-day simple moving averages, SMAs, are all trending upwards. This confirms the bullish momentum, as the stock is consistently trading above these key levels. If the price stays above the 50-day SMA, we could see continued strength. However, a break below the 200-day SMA might signal a trend reversal. Earnings reports can make or break a stock's momentum. In its most recent earnings release, Rheinmetall reported an EPS of €3.05, which unfortunately missed the consensus estimate of €3.574. Despite the miss, revenue growth and net income remain strong, showing that the company is still expanding. A slight earnings miss isn't always a deal-breaker. What really matters is future guidance. If Rheinmetall continues to grow at its current pace, investors might overlook the short-term underperformance. To really understand Rheinmetall's position, let's compare it to its peers in the aerospace and defense sector. With a fundamental rating of 7 out of 10, the company stands out in profitability and financial health. Compared to its competitors, it has solid margins and a growing order backlog, which gives it an edge in the industry. However, one challenge it faces is increased competition from US and European defense contractors, which could impact its future market share. So, what do the experts think? Analysts have given Rheinmetall a strong buy rating, with an average 12-month price target of €1,075.30. This suggests a slight downside from the current price, meaning analysts believe the stock might be slightly overvalued in the short term. However, long-term growth prospects remain positive. Some analysts have even raised their price targets recently, reflecting confidence in the company's ability to sustain its momentum. A big catalyst for this stock is the upcoming earnings report on March 12, 2025. If Rheinmetall beats expectations, we could see a fresh rally. On the other hand, another miss could trigger a short-term pullback. Other key factors to watch include geopolitical developments, defense spending policies, and potential new contracts. So, is Rheinmetall a buy, hold, or sell? Let's summarize. On the bullish side, we have strong earnings growth, increasing global defense budgets, and bullish technical indicators. Analysts are mostly positive, and the company has a strong position in its industry. On the bearish side, the stock has had a massive run-up, and some analysts believe it's slightly overvalued in the short term. There's also the risk of increased competition and potential earnings volatility. Overall, Rheinmetall looks like a solid long-term investment, but at current levels, it may be wise to wait for a pullback before jumping in. If you're already holding, you might want to ride the trend but keep an eye on key support levels. As always, make sure to do your own research and invest wisely. That's it for today's deep dive into Rheinmetall AG. If you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss an update on the latest stock market trends. Let me know in the comments, are you bullish or bearish on RHM? I'd love to hear your thoughts, and remember, this analysis is not financial advice. Always do your own research before making any investment decisions. Thanks for tuning in, and happy investing.